ICE enforcement actions in this mass deportation effort that had been announced and is now being executed by the Trump administration is happening right here in the beating heart of the Californian agricultural economy.
They're not just workers, they're people, they're community members, they're students in our schools, they're our friends.
Fields that once fed the nation now feel like hunted ground. Overnight, immigration teams swept the strawberry rows of Ventura while grain prices cratered 1,000 miles away. If the people who plant and pick our food are dodging helicopters, what chance do Midwestern growers have against tariff walls that keep climbing? Sorghum exports have plunged 95%. Wheat orders are vanishing, and soybeans pile so high they threaten to split their silos. Yet checkout counters still brag grown in America, as totals jump $3 a cart. Tonight we follow the hidden fuse running from a pre-dawn raid in California to collapsing credit lines on the plains and a stock market blinking scarlet. Because the next tweet, the next tariff, could decide whether your fridge stays full or whether America's breadbasket becomes its newest ground zero.
And we're going to have to do something about that. We can't take farmers and take all their people and send them back because they don't have maybe what they're supposed to have.
Trump's promise that raids are going to stop never reached the high plains. By the time his words echoed, Kansas co-ops were already choking on unsold sorghum. January's 10% duty from Beijing met April's leap to 54%, erasing a market that once bought 9 of every 10 bushels. Export books scream the truth. 1.4 million T last winter, just 78,000 T today. A 94% collapse that turns silos into grain graveyards. Cash bids sink to $4.15 a bushel, below the diesel to haul it. Farmers shut augers, ring bankers and pray. Lenders reply with spreadsheets, trimming credit and demanding 10% extra collateral, until policy stabilizes. Machinery dealers feel it next. Orders for seed drills and combines fall a third, slicing payrolls on main streets already hollowed out. The political line says sorghum will find new buyers. That ignores shipping math. Brazil loads closer to Asia, and war risk surcharges on U.S. contracts wipe out any price edge before grain even leaves the elevator. Co-op managers warn storage will max out by harvest. After that, grain spoils in plastic tubes along county roads already dotted with for sale signs. It isn't an oversupply problem. It's a policy-made barricade that grows taller each week. Each new tariff locks another gate, stranding product and producer alike. If sorghum can vanish in a single quarter, imagine what waits for crops that dwarf it.
Breaking news, folks, the VIX, the volatility index, has now hit a 5-year high.
The market's fear gauge spikes, but it's the baker, not the banker, who should panic. Wheat, the backbone of every loaf and noodle, just lost its passport. When South Korean millers tore up 65,000 tons of Kansas grain and paid a premium for Russian cargoes, they exposed a fatal weakness: trust. Beijing's 34% tariff doesn't even touch wheat directly, yet insurers now charge war risk fees on every U.S. shipment. Add $9 a ton, and America's age-old price edge vanishes before the vessel clears Duluth. The Philippines proved the point in a single week. Cancel 12,000 tons of U.S. wheat on Monday, sign a 110,000-ton deal with Australia on Friday. Even though Chicago futures sat at a 2-year low, inside the Great Lakes elevator network, unsold stocks ballooned 37%, enough to fill a dozen Panamax ships that never arrive. Cash bids sink 40 cents below break-even. Some North Dakota growers grind their own wheat into cattle feed because selling bleeds but storing bankrupts. Every lost cargo rewrites supply chains that may never swing back. Russia, once a bit player, now exports 40 million tons a year, 4 times U.S. Gulf loadings. Millers crave predictability. They cannot hedge political tweets. If wheat, a pillar of food security, cracks this quickly, how will markets react when the tariff gun sights shift to soy, corn, or beef? The blow that crushed sorghum is now bruising soybeans, the Midwest's cash engine. And this time the numbers dwarf everything before. On April 10th, Beijing's escalator tariff of 34% landed like a hammer. Chicago futures dropped to $10.12 per bushel, sliding toward the death line, where more than half of Iowa bleeds red ink. Overnight, unsold inventories ballooned past 380 million bushels, the highest in 4 years, shoving storage bins past safety marks and forcing producers to tarp grain on gravel pads. Meanwhile, Brazil is staging a quiet takeover. In just 1 quarter, the port of Santos loaded a record 17.7 million tons bound for China, grabbing over a quarter of the world's most valuable feed market while U.S. beans sat marooned in railcars. Every ship that leaves South America on time cements a new supply chain, a new insurance contract, a new customer who discovers they can thrive without the Mississippi. Farm math turns brutal. Average production cost hovers near $9.65. Cash bids have slipped to $10 even, erasing margins before a planter rolls. Some growers flip to corn or leave acreage fallow, a desperate stop-loss that still kneecaps local seed dealers, fuel suppliers, and rural diners. Others store and pray, but interest piles, and the market knows patience is finite. Analysts warn that if the tariff stalemate drags through harvest, U.S. soybean exports could sink another 20%, pushing hundreds of farm balance sheets from fragile to fatal. Cattle, hogs, and poultry were supposed to be immune. Meat always finds a table. But every export crate now faces a bureaucratic minefield that feels more lethal than any tariff. Nearly 1,000 U.S. packing plants must renew Chinese registrations this quarter. Paperwork that once sailed through Beijing now lingers in silence. One missing rubber stamp leaves $5 billion of beef and pork in limbo, and the clock is merciless. Even loads that clear the paperwork gauntlet stumble at the docks. Shanghai's customs officers yank seals, unload every pallet, X-ray each box, then stick shippers with storage bills topping $1,200 per container. Chilled cargo waits so long that ribs sweat, bacterial counts climb, and whole shipments are condemned on the pier. Futures traders spot the stress first. June lean hog contracts slid below 90 cents a pound, an 8-month low that vaporized $15 million of farm income overnight. Packers respond by cutting shifts, and the ripple punches Main Street twice. Overtime disappears and surplus meat floods domestic shelves, slicing prices while feed bills hold steady. Producers can't simply switch markets. Southeast Asia mirrors China's protocols, and Europe shrugs at U.S. hormone rules. With no exit, barns back up, and the cost of keeping animals alive surpasses the price they'll fetch. The tariff war has morphed into triage. Cull early, borrow deeper, or pray for a policy pivot before the feed silos empty. Container space, the silent lifeline of U.S. agriculture, has become the most expensive commodity on the coast. A draft White House order proposes fining any China-built vessel up to $1.5 million per U.S. port call, and ship owners are already voting with their rudders. Weekly calls at Los Angeles fell from 12 to 5. Tacoma and Savannah show the same retreat. Fewer arrivals mean fewer empty boxes heading inland, and every missing 40-footer traps another 100 tons of grain in a landlocked bin. Freight brokers quote Omaha to Shanghai rates that now exceed the cash value of the corn inside the box. An upside-down equation no elevator can swallow. Across the border, Ottawa's 25% counter tariff on farm machinery and Saskatchewan potash finishes the squeeze. Fertilizer costs jump $100 a ton, and a Nebraska corn grower suddenly needs $60,000 more just to break even on soil nutrients. Operating loans shrink, storage fills, rail sidings idle. When ports, ships, and inputs all carry penalty pricing, the harvest itself turns from asset to liability, and the credit system that props up rural America strains at every joint. The logistics loop is nearly closed. One more policy twist could snap it outright. How that break ripples through store shelves is where our story ends. America's farmers aren't losing to drought, disease, or demand. They're losing to paperwork, port delays, and tariff chess matches played far from the fields. From sorghum to soybeans, wheat to livestock, each sector isn't just hurting, it's cornered. Export markets are vanishing, costs are rising, and supply chains are collapsing under rules that shift by the hour. The message from buyers abroad is clear. They need food, but they no longer need it from us. Unless Washington changes course, what began as a trade strategy may end as a nationwide food and credit crisis. Thank you for watching, and see you in the next video.